Elon Musk has committed to purchasing Twitter. It comes at a price tag of $44 billion, which is $54.20 per share for what is roughly 81 million shares. Is it a good decision? Is $54.20 cheap or not? Let's find out. Almost as soon as Elon announced this deal, all financial websites that share their views on fair values and intrinsic valuations switched from their own predictions to a bland and fixed price of $54.20. From Guru Focus to Morningstar, all you will see is them stating that the value of $54.20 per share is what Twitter should be. So we are not going to find many websites or institutions trying to make a valuation of Twitter. But I want to see if indeed this valuation of $54.20 is a premium or a discount. Let's apply some value investor metrics and dive into the fundamentals. By the way, the price of Twitter currently at the end of May 2022 is hovering at $35.85. Let's start with the traditional price to earnings ratio. The godfather of value investing, Benjamin Graham, would recommend buying the stock at less than 16 PE. Currently, the PE is at a whopping 161.51. The PE ratio is very high because Twitter has been in the loss for the past 2 financial years.
Hide the money, y'all! There's poor people around!
Revenue has been growing though, and so has the number of Twitter accounts. I guess that is what is attractive to Elon Musk. What about debt to equity? Is Twitter debt-free? Currently, the debt to equity ratio is at 1.12, which means they have more debt than equity. So, looking at the fundamentals, I personally would need a mind-blowing reason to justify buying the stocks. But for somebody else, they may see some reason to why they should buy stocks in this company. As it comes to valuation, if you apply the traditional discounted cash flow valuation or the earnings power value, the recommended price at which to buy Twitter would be in the low $10 range, which is a far cry from $54.20. If you were an investor, you could see this as a huge discount. Somebody is willing to buy your share at $54.20 and the market is selling it to you at $35. It's like a 40% discount. Of course, this amazing deal is contingent on the fact that the deal will eventually go through. So it really seems as though Elon Musk is overpaying for Twitter. The only logical explanation is that he sees Twitter to be worth much more in the future. How did I come up with the valuation? I invested in financial education, my friend. So start your investing journey now and register for our masterclass. Link below. Thank you and see you soon.